welcome to this week's Fireside Chat with Jesse. I am joined today by Cory Damm, Managing Director at Velocity Equipment Finance. Thanks for joining me, Cory.
Absolutely, Jesse. Thanks for having me.
Nah, it's great to have you on here, man. I congratulated you. What was it, 18 months ago? Has it been 2 years when you officially started?
Yeah, we officially started almost, let's see, 2 years and a month ago. Uh, that's funny. I haven't actually thought about that for a second. Yeah, 2 years and a month. I love my kind of calendar.
Congratulations on your 1 month post 24-month anniversary. But no, man, it's good to see your face. It's great to have you on the program and looking forward to learning more about your career and Velocity Equipment Finance. So just kind of jump right in here, Cory. Do you mind just kind of introducing yourself and your career to date in equipment finance?
Sure. Ahead of this, I went back to double check dates on my LinkedIn, and I'm just like, I guess I'm coming in at 15 years in equipment finance. And for the last 5 years, I've definitely been telling people like I'm coming into 10 years. So I'm just holding on to that. But uh, yeah, I started right out of school. So I
Uh,
cut my teeth at Direct Capital up here in Portsmouth, New Hampshire, uh, ahead of 2008. And when 2008 came through, uh, managed to survive the first one or two waves of rifts at the organization, but in the third took a little hiatus to go live in Park City and chase a skiing dream. So I did the ski bum thing,
yeah,
uh,
it's fantastic.
trying to race competitively a little bit in Park City, and still stayed uh, as a sort of independent consultant, doing some brokerage stuff at night and in between making runs as much as I could, uh, and came back to go back to school in Cambridge and Boston, and restarted kind of what was the first version of what's now Velocity Equipment Finance. And we called it Lender Cloud, and it was kind of a reverse auction model for
Okay.
the small ticket equipment finance space, and we were trying to build that up with some guys from school, and got a little bit of traction, but it was, the sort of first real learning we had was it was too slow. So we weren't the first people to try to bring reverse auction to market, and we probably won't be the last. But uh, I think that the learning we took away from that was it was really too slow of a transactional experience. And uh, along the way, uh, a guy reached out to me, uh, and said he had just raised a bunch of money, and wanted to actually bring a kind of an auction model to market, and that was LeaseQ. So I kind of helped co-found LeaseQ, and we started that in 2011, and that was my first sort of real experience, with some guys that had built startups before and had built companies from nothing, versus me just trying to sort of do it out of the dorm room, right?
Sure.
And that was a ride. We built that. That was sort of the first automated, sort of experience style, shopping experience for commercial equipment finance. Uh,
Okay.
we built that group, kind of at its heyday. I think we were up to almost 40 people,
Okay.
uh, and rode that through to its ultimate sale to time payment.
Okay.
Uh, in there, excuse me, uh, that was phenomenal, because I think one of the I got to sort of see what that experience was of selling a company and then
Cool.
integrating into a bigger firm. And going from, when we started LeaseQ, it was Vernon, Tyree, and I in a 10 by 12 room, you know, battling each other all day, trying to find the best possible way to improve customer experience and find capital, and do all of those things that you do in a startup, through to, you know, extremely well capitalized entity. That was Time Payment, and with its partnership with Fortress, and kind of got to ride that excitement through some of the company's first acquisitions of other brokers, and leading the team to roll up what at the time was a restaurant equipment finance group into a significant entity, origination channel for Time Payment, and COVID came along, so that was a ride for
Sure, sure.
but I think we successfully navigated that, um, as much as a lot of people could, and for an organization whose primary origination channels were fitness centers, restaurants, and offices, managed to still survive and come out pretty well on the other side. But in that, uh, we kind of just coming out of that, we started Velocity, which had an initial name before we were ultimately acquired by, kind of in our first year. Just coming into the tail end of our first year, we were acquired by Trans-Pecos Bank, which is as far as banks go, relatively small state bank out of Texas that's got a uniquely nationwide footprint. So we've spent the last it's about a year now, kind of transitioning from an independent, a small family office backed independent, to a bank owned platform. I think it's been an adventure, that's for sure. In a relatively short time, have been fortunate enough to see, little teeny startup land, a big company, to bank, and I treasure all those experiences along the way. So
No, and thank you for that history. There's a few things I would like to unpack from that. First thing that kind of comes to the top of my mind is, at what point in your wanting to be a professional skier, at what moment that you're like, okay, I need to go back to school? Did you lose to someone who was a lot younger, a lot older? Like, at what point did you have that epiphany where it's like, okay, I gotta go back? Do you remember?
Oh yeah, I remember. Uh, it's a little like, it hurts a little bit.
Oh, I'm sorry about that. I was just
no, it's fine. I was, I think, I skied competitively through high school.
okay.
I was working on making the team in Park City, and that was sort of the best of the best.
Okay.
Everybody, it was coming into an Olympic cycle year, so the ski team, the Team USA, skis out of Park City and other places. So it was I think I realized, as good as I thought I was coming out of small town New Hampshire, it was a new echelon, it was a new level of talent that uh, I could keep up with, but I was not going to be at the front of the pack on. So I was like,
Okay.
all right, I've got to go. I'm not going to make a career out of skiing competitively.
Sure, and part of my ignorance, I just, originally I grew up in upstate New York. We didn't, I think we had Greek Peak that if you drove a couple hours to, you could get to it. So not, we didn't have a professional skiing program or any competitive skiing whatsoever. So
it was definitely memories I'll treasure for a long time. But it was, and we got to meet some phenomenal people. But there was a level of just competition that I had not seen yet before, and that's exactly why I went to go do it. But like, I'm going to be better served
sure.
doing something else where I feel like I can excel.
It's fair. It's completely fair.
It's kind of like being a bogey golfer. Like, you can keep up with anybody and you can play in any foursome, but like,
Yeah.
you're not winning.
I choose not to want to be better than a bogey golfer because my handicap stays higher. And like you said, you can keep up with anyone. Plus, you get your handicap.
Right.
So, yeah, I can definitely relate to that. Nor do I want to try to improve on that and then get frustrated and just be like, this sport's terrible. I got to do something else. It was interesting. It's like 15 years. Congrats on that. This is my 19th year. And when we were, when you're getting in, you're just like, oh yeah, I can't wait to hit that 10 marker. And then you kind of hit 15. It's like, okay. Then I'm almost on 20, and it's like, oh, maybe I should go down the other way.
Right. Well, it's fun. We used to joke about it a little bit. It's something about this business that's like once you sort of cross that like 4 or 5 year mark, like it's like the sand of the beach. It sort of stays in your toes somehow. So one way or another, I've always been sort of touching equipment finance.
I like that. I like the sand on the beach as opposed to the cliche Hotel California that everyone kind of says. I like the sand on the beach. It's fair. It's fair. So if you don't mind, just mind just introducing, Velocity. I know you gave a little high level, but what type of industries are you in? What products are you offering, Cory?
Sure. So Velocity Equipment Finance, though we are a bank-owned organization, we're a division of a bank. We really, and this is one of my favorite things about partnering with these guys, is we really operate like an independent.
Yeah.
The strength of the balance sheet of the bank, but we're really our mission is to as much as we can democratize access to small ticket equipment financing as a generalist. So and deliver a consumer like experience, so user experience for both a consumer financing like user experience is what I mean from a sort of speed and functionality standpoint to market. So we offer an A to C credit spectrum. Right now, today, it's probably easier to talk about the industries that we don't do. So we are not doing anything titled today, which is really just because of the kind of automation we're trying to deliver to market doesn't bode well yet with the way titling works in every state.
Those people watching this that do titling understand, like, yeah, I get it.
Right.
I get it. It's like, no, I don't want that headache.
Yeah. And we're not doing anything that's medical laser or laser tech that's non-MD. We have a pretty strong MD practice kind of together with the bank, but if there's not a doctor involved, then outside of that, all the other sort of standard restricted industry stuff. But we've found, I think, probably from a strength standpoint, in the depth of knowledge, just together with the Trans-Pecos guys, we have a really strong medical tech program. Kind of anything that touches a doctor, and we've got a deep history of lending into medical practices, and this is really comes from sort of legacy bank knowledge and history there. But we've funded from restaurant equipment to material handling to doing oil field services stuff. I think and a bunch of sort of, I'd call it miscellaneous equipment along the way. But our average ticket size right now, we run about 70K, which is a little bigger than I thought our average was going to be. So we delivered a market 1,000 to individual transaction sizes, 1,000 to 150K in a true app only program. We fund over 150K, but it's full financial disclosure. Our individual legal lending limit is, I think, like $10 million for individual credit, but we're really trying to stay focused in the small ticket space. So we're not necessarily out soliciting. I mean, we are not out soliciting for mid ticket or large ticket.
You get that one that comes in, you're like,
right?
How much flow volume I need to do to get that one right there? Maybe we'll just take a swing at it.
In a lot of that, because I get hesitant about talking about how we do larger credits, because it's easy for us to get distracted sometimes on some of those larger opportunities, and we're really trying to stay in the lane.
Hey, you're not the only
So,
one. You get a lot of mid-large ticket people that sit there and it's like, look at those little ones down there.
right, like looks and
Yeah,
feels great, but it's, you know, it's a lot of work to get a
totally
couple
different animal.
lines. So
Yep, yep.
I'm, you know, regularly talking to our group about let's stay. We're trying to really automate small ticket. Uh, you know, we if we get something for us, you know, really where we will spend time on it, if it's a strategic partner, if it's a vendor or manufacturer relationship,
Sure.
uh, or a TPO partner of ours that has, you know, what really looks like it fits something that the bank has expertise on, you know, in a bigger ticket fashion. I'll bring in some of the bank lenders to help
Sure,
and work
sure.
on those. So the equipment finance guys, you know, stay focused in our lane.
And that was and if there's something, do you guys syndicate anything whatsoever, discount anything, or do you guys service your entire portfolio?
Uh, we are so in trying to be so yes is the short answer.
Okay, okay,
Uh, in trying to deliver this A to C credit product, we've established some phenomenal syndicate partners, you know, where
okay,
that allow us to own funding the sort of whole front end user experience, while ensuring the stuff that we do continue to hold on balance sheet, you know, fits within the sort of bank parameters.
okay.
But from a customer standpoint, from a vendor standpoint, from a TPO standpoint, sort of always looks and feels like Velocity Equipment Finance.
Okay. So I always have to ask that question because you never know what other relationships people are looking to have out in the marketplace. And so you mentioned vendor. Do you guys do direct any broker business whatsoever?
Yeah, so we right now we're primarily a broker and third party originator supported
Okay,
business. Uh,
okay,
we're layering vendor and direct into that, but we're primarily because we're super lean uh, in our in our team, and also to help us sort of prove out our uh, credit risk and underwriting sort of technology stack. We're working with primarily TPOs, which have been phenomenal partners since we've started. So.
got it. And if I was a broker in the industry watching this, what would Velocity be looking for? I guess in a traditional broker perspective.
I think the right answer for that in our where we are in our life cycle right now is somebody uh, that has in their domain an expertise about their either the equipment that they typically work in, uh,
Sure.
or the vendor partnerships that they're trying to support. We very much because of the level of automation we're bringing to the user experience, it's uh, we are a better fit for programmatic solutions than
Okay.
necessarily looking at one-off esoteric kind of
Sure.
transactions. We're not a great story. I mean, we're not a story lender. We're formulaic, very much
Okay.
so, uh,
Okay.
and that's okay. You know, we're happy
That's
with it.
absolutely,
We're trying
absolutely.
we're trying to bring the market, and I can say it's been particularly when you're starting one of the, you know, we talk about distractions in bigger ticket, but that comes in smaller ticket too. When you're like, you just want to be a good partner and help somebody try to fund a deal that might look and feel right. Uh, but uh, we're really trying to stay in this. We want to be a programmatic solution for a partner. So I think uh, maybe more succinctly, it's somebody we can that'll work with us, that we can work with. We want to be meaningful to them. We want them to be meaningful to us.
Sure.
Uh, Whether that's, and that doesn't necessarily just come in volume. That comes in what kind of help us build a solution that fits for you, help us tweak uh, a user experience that might fit for one of your vendor programs, or with uh, the freedom that we have as sort of an independent group within uh, within the greater umbrella, I think uniquely we can tweak a lot of process solutions.
Sure.
We don't have one of the kind of impetuses to start this company fresh. And there was a while we were sort of talking about doing a roll up and trying to acquire a few different people and roll them together, or acquire a bigger organization and layer our tech stack onto it, was really to avoid the like culture hazard. That's the we've always done it this way, kind of thing that it pervades in bigger
Yeah.
organizations. And that's,
Yeah.
it's natural that it comes out that way. But we ultimately said, okay, let's make it the way we think it should be based on everything we've learned in the last 10 years, and then always stay open to the ideas of it can be better. Let's continue to iterate, right? Let's iterate on design and take this sort of hold on to our startup approach and say, okay, we can iterate, we can iterate. So I've worked
So
hard.
it's refreshing to hear that, man. Because you 15 years in this industry. It's almost like it's allergic to some of the words that you constantly mention. Automation, having a program, like some of these things, and it's like people still run off spreadsheets, as the rule, not the exception. So it's like, what are your thoughts, I guess, on just general technology and equipment finance?
But yeah, it's remarkable to and I've had I'd call it like a relatively narrow view, probably compared, maybe if you baseline me against other people who have been around longer than I across the organizations. But that it is very apparent in that adage, like, if it ain't broke, don't fix it. How some very large originators still, to your point, operate on green screen or spreadsheet
Like
based.
duct tape and bubble gum. You're just like, what are we
Yeah,
doing? Like, how? Like, what's going on? It's
in
folders
print.
everywhere. And you're just
Yeah,
like,
in
what?
print, profitable, like print money, like extremely profitable, great organizations that
Yeah.
uh, when you come look at it with maybe like a holistic view. And I mean, you can even talk to people in those organizations and are like, we know, like, we know, but like, it's working. So the sort of phrase we used to talk about at LeaseQ is like trying to, in the bigger organization, to make a technological adoption is like trying to change the cars on the tire when you're driving on the highway. Like, you can't stop originations to
Sure.
implement a new CRM, uh, because everybody's got investors or shareholders or boards or people that they've got to continue to deliver profitability to. And so and you can go back 20 years and maybe longer for amount of people that have been talking about how automation is coming. And I think of all the in equipment finance specifically, and I think of all
Sure.
the pain that COVID caused across the industry and ripples that it caused, it was a evolutionary step change in technology adoption uh, of stuff like in 6 months that had been roadmapped for maybe years at some bigger
Sure. Or
organizations.
like this. I've been in sales my entire career, and we had team. We didn't have teams. We had like go-to meeting or certain things, and no one ever had their cameras on before. It's like, I don't want to look at myself, or I know, so it's just the fact that you get some of these senior level people to turn on their cameras and you can actually have a personable conversation. 4 years ago, 4.5 years ago, was no one thought about that.
Yeah. So I think that and you can see it in this and in this kind of format and in meetings, but in the
E-sign
kind of
people,
right,
finally.
right. Wide adoption of e-sign technology that was like stamped in 2002 as federally approved. But it's this like we just keep coming back, like, if it ain't broke, don't fix it. So that was a really, at the risk of repeating myself here, is like, that's why we wanted to start sort of a new organization and go ground up on what we think is the tech stack that's adopting some of the uh, sort of newest fraud validation tools and ID validation tools and asset validation technologies, and then using that instead of trying to layer it into a spreadsheet backed process.
Sure.
And I can say, even in doing so, it's been clunky, through the first 6, 10 months, 12 months, and even still, some of this, you're like, oh, this would just be easier to put in spreadsheet. But I'm like, we're trying to build this thing at scale, so like,
Yeah.
let's not do that, because we're going to have to fix it. So let's just start, even if we have to go slower now.
Well, kudos for you if you can stay on that trajectory the entire time, especially as the volume continues to grow and everything else. It's yeah, it's an interesting quandary, I guess, you get yourself into.
But I think, there's lots of great organizations now that I think you took that opportunity, or for lack of a better term, that came out of figuring out how to navigate COVID and bring this kind of user experience to market, like the QuickFi guys and Peaks, and there's the half a dozen others that are really driving this, what I think will be a meaningful transition or adoption, sort of forced adoption, that's going to be led by this group, and we hope to be fortunate enough to be part of that set of early adopters and market changers.
Oh, that's perfect. Just make sure you stay away from your distractions, which sounds like you obviously are. And there's always going to be those little ones where you're just like,
Me and my right hand, Lewis McClure, we sort of have a joke amongst each other. Like, somebody will send a spreadsheet, and like we'll just beat each other with a rubber hose if one of the other person does it, to stop it. We're like, build the report, make it, send me the link in Salesforce to the report. Stop sending me this spreadsheet you made by yourself.
It's fantastic. As someone who creates like a new spreadsheet a day, yeah, practice what you preach, Jesse. Yeah, I'm sorry,
right.
I can't
like,
sometimes.
If we're ever gonna have to report on this more than one time, like, don't make it as an ad hoc report. Automate it.
It's fantastic. I'm going to shift gears a little bit, Cory, if you don't mind, man, and talk about, I'm sure our paths probably first crossed at a NIFA or NELB conference in the past, which is now AACFB. I just wanted to talk about those trade organizations and kind of what they've meant to your career so far to date.
Both NIFA and AACFB independently have been, I'd say, like a phenomenal influence on me individually, and getting to know the space. And if anybody watches any of your other episodes, I think we all have a similar message in the way we talk about it. But it's after you cross that sort of 4 or 5 year window, and even really before you recognize how close knit the organizations really are, and the people who make up those organizations, and the families that that I don't know, group together and share. I think the friendships and the partnerships that have been forged, that of participating regularly in both NIFA and ACFB, and are have had a meaningful trajectory on the way that this company has come together, and the way that we've advanced other firms that I've worked with in the past, and partnerships that have come from those things. I mean, from uh, of meeting funding sources and other funding partners. You know, but when I was a broker before, and acted as an independent broker, I don't think there's a better
Sure.
place to go meet every funding source that you may need to take what your solution to market than IFA. The and even opportunities, vendor programmatic opportunities. I've been referred big partner, you know, historically big partner opportunities from somebody that I might have thought was a competitor who, you know, I met at the show and it wasn't a fit. That program wasn't a fit for them for whatever reason. And they
Sure.
remembered
Sure.
our conversation and said, I think this might be a fit for you. So I referred them over to you. And it's been incredibly fruitful, personally and professionally in that regard. So I look forward to continuing my partnership and membership in both of those organizations.
No, and that's it's a great point, and you hear about that all the time, and it's almost like then you go out of your way where it's like, how can I reciprocate and potentially find something else for person that you thought where it's like, oh, you know, what am I gonna do with this guy or gal?
Yeah, yeah.
No, but you hit on some very valid points there, and yeah, when we have another conference coming up at the end of this month here, so it'll be a good time in Huntington Beach.
Yeah, Huntington Beach in March is never a bad place to be. That's for sure.
No, no. So one question back to Velocity, if you don't mind. So you
Sure.
guys are a little over 2 years old. You're in New Hampshire. Is that an actual office, or do you have a home office? Banks in Texas. What
Yep.
is your, I guess, location footprint, Cory?
Well, there's what is the company's footprint, and then there's what's Cory's footprint, and those are two different things.
Fair.
From a funding standpoint, we're funding in all 50 states, you know, across the country. We fund in Canada as well. The bank is based out of San Antonio. So Transpecos Bank is a San Antonio and Texas-based state bank that's got 4 branches. It's a 100-year-old bank. It's just pretty neat organization in that they've long been again, sort of call them relatively small community bank that has grown significantly, sort of tripled assets in the last 5 years. And they're really trying to, I think the corporate line that we talk about is sort of reviving community banking and doing so by finding these opportunities like they have with us and bringing digital brands that in a nationwide footprint. So though they're a state bank, we operate nationwide. This is a home office here in Portsmouth. I can split time between here and San Clemente, and then we've got Lewis is based out of Austin, and then the rest of our operations team is in the San Antonio office.
Okay. And then from a company growth perspective, like when you're looking for new employees, are you envisioning more remote employees or more in office? And I know that's can change on a regular basis. I'm just curious.
Yeah. I think, you know, for a long time, I was very much a campus guy. Like you got to have everybody on campus, and I think unquestionably, there's a huge amount of value that comes out of having everybody in an office together, bouncing ideas off each other. I mean, like I mentioned earlier, I was part of the sort of OG Direct Capital team, which was very much in one room on the phone, hearing everybody together, and there's a huge amount of value that came out of that. So I think on a long-term basis, we're going to find our balance in both environments. I think for, you know, I believe more than I believe in campus. I've converted to like find the right person, find the right people, find the right talent for the right job. And
Sure.
If that is in, you know, anywhere land USA. We have the connectivity to spend more time.
As long as you don't have crap Wi-Fi, you're fine.
Right. And now we get Starlink, so it should be able to connect anybody, anybody anywhere if we need
Right.
to. But I think there's a lot, particularly in the younger part of the sales organization, that comes from having a campus environment. So I think we'll find some balance between those things. There's a phenomenal talent pool here in Portsmouth. There's obviously a phenomenal talent pool in Southern California. And now there's little bubbles in different parts around the country, and in Jersey and Florida and Nebraska, and wherever there's been a bit of shop for a while. So I think the thing we care about most is getting great talent in the right job that they're happy with, and we know if somebody's happy.
No, that's perfect. I mean, I ask younger entrepreneurs like yourself the question, and then more senior people in the industry the question, because as we were getting through COVID, right? I mean, the pendulum obviously swung all the way to remote. And I thought we'd end up somewhere back in the middle once people are like, no, I have this investment, I have this office space, get your butts to work.
Right.
And I see it going more towards people trying to say, okay, you're getting back in the office, we have this space, we want to be collaborative. I mean, like you, I grew up on the Northeast in a sales environment. I wouldn't, as a younger salesperson learning something, that time with those people that have been doing it for a while, I mean, that's invaluable, right?
Yeah,
I don't know how
100%.
you would survive. It doesn't matter how much of a self-starter you are. Like, I would think you're doing yourself a disservice by not being around some people. But always just an interesting conversation, Cory. And appreciate you giving me your perspective.
Yeah, 100%. I think you just said, I just be repeating what you said back to you. Like, if you're a younger person in a sales organization, you're gonna learn years of knowledge if you're around other people that you're just not gonna do by yourself. Like, you just can't. You can't get the exposure.
Well, especially working from direct capital with that sales organization that they had, and in theory still have, just a couple generations later, or acquisitions later.
Right.
Cory, I ask everyone who comes on here to give me a little fun fact about themselves. So other than the downhill skiing, competitiveness, that side of you, what else would you like to share with the audience here?
Let's see. I've recently become addicted to jujitsu. So I'm now a competitive jujitsu player. So
okay,
that's my new competitive hobby.
I just overheard a conversation at the ELFA roundtable between Spencer Thomas and Kirk Phillips.
Yeah,
I'm like, I looked at these guys, I'm like, okay.
And that's one of the beautiful things I've found about that sport is, like, no matter the age, no matter your fitness level, like, you can roll. And you sort of tease that you're going to ask about this ahead of the conversation. I was thinking, there's kind of like it's sort of like when you're new to jujitsu. I think there's a joke that's something like, there's a CrossFitter, a sommelier, and a jujitsu practitioner that, like, walk into a bar, and how do you know? And it's like, because they're going to tell you. So I was like, I don't know if I'm going to do it, but, like, that's my new thing.
That's awesome. I drive by those places every now and then, and I'm like,
do it.
Yeah.
Do it. I truly, like, everybody, men, women, doesn't matter your age. One of the best guys at my gym in San Clemente is 70 years old. He's one of like 6 coral judo belts in the country. He was in like was a world champion. Like he's phenomenal, and he kills me. I'm a 250 pound, 6'6", like
Well,
athlete, and
so how does that make you
this
feel? Like
guy
he's
throws me
double your
around.
age, like probably smaller than you, and it's like, come on, man! Like I got this. It's like,
Yeah, it's pretty
yeah,
remarkable. It's very humbling. You know, one of the things that I've
there you
learned,
go. Humbling.
yeah, one of the things that you learn is to be humble. But it's the analogies that you learn in that sport are incredibly applicable to all things business and life. So I can be a bigger fan.
That's an entire different conversation that we could go on for
Oh yeah,
forever there.
100%.
Um, so I guess in summation here, man, at the end of the day, Cory, why should someone want to do business with Cory Damm and Velocity Equipment Finance?
You know, I think one of the I worked for a guy along the way who's chair of the organization. He said something in a meeting before I was working for him. And he said, what's most important in his comment was in vendor finance, but in equipment finance is really like 4 things. And it's uh, say yes fast, do what you say you're going to do, and fund me quickly. Uh, and 4th is if you can do so competitively, that's great, but do the first 3 things every day. And I think that really, and he was, like I said, was sort of specifically talking about what's important to vendors and in equipment finance. But I think that's important to everybody. That's important to your TPO partner, your end user, and your vendor is those 3 things. So we've built Velocity on delivering on those 3 tenets every day, in everything that we do. So I think being a part of our group and in working together with an organization that makes those their priorities, I think that's what we're trying to help bring to market.
Perfect. And those 4 things make complete sense. You know what, Cory, I really appreciate your time today. Thanks for telling me your story and giving me some more insight on Velocity. And look forward to seeing you here in a couple of weeks, man.
Yeah, Jesse, thank you so much for having me. We'll see
All
you in
right, we'll be
Huntington.
talking soon. All right, have a good one. Safe travels.
Take care.
All right, bye.